Thank you for staying with me. The first company we'll be reviewing is Presco PLC. The share price of Presco PLC is 538 naira and its market cap is currently 538 billion naira. Presco is actually a company that produces palm oil and vegetable oil. They actually have a palm kernel and oil palm plantation where they get their inputs right for production. So, what are the strong points for Presco? The PE ratio, that's the price to earnings ratio, is 8.5 times below the food industry average. So the food industry average is 11.9, so but Presco is 8.8. So you can see that Presco is has a lower P/E ratio. So this is a good point, a good strong point for Presco, having a lower P/E ratio. And then the earnings are forecast to grow by 40 by 2.25% per year. So you can imagine earnings growing by 40.25%. This is a forecast though. So but then even though it's a forecast, it's a good indication of rapid growth as a steep growth in the future. You can also see the earnings grew by 196.5% over the past year. So the earnings has grown by 196 and it is forecasted to grow by 40.25. So if you look at this, you would say the forecast is conservative, right? So that's a good strong point for Presco. And then the company pays a reliable dividend of 4.89%. Wow. So this is a dividend paying company. Strong point. Another strong point. If you are the type of investor that would buy a share and hold it to earn dividends, then this is a strong point for you for Presco. Then it's trading at a good value compared to peers and industry. So this basically means that this Presco is trading at a good value. So meaning that when you compare its value to peers in the industry, peers, and you will see that it's actually better valued than those other companies. Of course, every company has its own, every company with this type of great returns would so definitely have some risks as well that we should be aware of. So the risks here is that they have high level of non-cash earnings. The company has high level of non-cash earnings, and then the company has a high level of debt. So this may actually so the high level of debt means that a lot of their profits will be used to a lot of the monies are supposed to go as come as profits to be used to service debt in the paying loan. But then this is a company that's been paying dividends, so I'm sure they will stay committed to their dividend paying pattern and find a way to structure their debt payments such that it does not take too much away from what will be distributed to shareholders. Okay, so let's see the share price growth. So yeah, the share price in as at okay, yeah, in 2021, the share price. Okay, sorry, I need to change this to 5 years. Okay, yes, 5 years. So as at 2021, let me get a point. Okay, 10 February 2020, the share price was 49 naira 85 kobo. 49 naira 85 kobo as at 10 February 2020. You can see it will get growing gradually. It's now 69 here, and then it moved here to 79, 2021, 2022, 132. At this point, it dipped a bit, picked up again, and then it's going and it's increased, kept increasing steadily, right? And then this is steep growth here. This is in 2024, last year. So the company experienced very high growth rate last year, and then it became flat here. This is towards the end of the year. It was flat, and of course, it's currently 538 naira now. So you can see the share price has been growing. So this is actually a very good indication that this company is growing and its share price is growing. So if you buy these shares and you're holding it for capital gains, that means that you would get a very good return, right? Considering the trend and the growth pattern of this company of Presco PLC. Okay, um, so let's see. So I'm just going to look at, so I'm going to drop the link to this tool so that you can walk through with it and then you'll find the link in the comments. So you can also use it for your own private use. can use it to also study stocks of companies that you want to buy. So I will just explain the very important, touch on the very important points so you can lay hands on the tool and also try to go through it on your own after you have seen the demonstration from here. So yes, so Presco exceed the energy food industry, which is 70.3% over the past year. So this is the shareholders return, right? So Presco shareholders return is 107.7%, and for the food industry average, it is 71.1%. And then the market average, that's the NGX, that's the entire Nigerian stock exchange average, was 15.7%. So you can see what Presco did, almost times 10 of what the market is doing. And then, of course, 30% higher than what its peers in the industry are doing. So that is what we have here explained here, right? So Presco exceeded NG food industry, which returned 70.3% over the past year. And then Presco also exceeded NG market, which returned 9.3% over the past year. So um, so Presco's share price, that is the price volatility. You can see Presco is here, as in is closer to low. The share price is closer to low. We saw some deep and right, so that's why it's getting this very light amber, right? Right, because of all those deep here and there. As I'm talking about all these dips, you can see there are some dips here, and then here too, there's another dip here. There is a dip here, there's a dip here, there's a steep one here, right? Another one here, another dip here. So all these things are what's impacting the share price volatility, and of course it did well. It's around here. This is where industry is. Industry is here, right? Industry is in the yellow region. So, but Presco is within the amber region. So that's a good one. That's a good one. So Presco has not had any significant price volatility in the past 3 months compared to the NG market. Okay, looking at 3 months period, so it has not had any serious price volatility. So Presco's PLC P ratio is 8.8%, as we have highlighted before. Its revenue is 154 billion, cost of sales is 34 billion, gross margin profit is 119.3 billion. So this gross profit is actually very huge. This company is doing well. So the nature of this company is such that the cost of sales is very minute when you compare to the revenue. So I want to believe the cost of producing palm oil is very cheap. It's not expensive. The company, especially because the company has its own plantation. So I want to believe it's able to source cheap raw material, right? So that is why its cost of sale is very low, right? And then the company has a very huge gross margin. No wonder the company has a lot of money to pay out in dividends, right? The other expenses is quite high. For based on my own analysis, on my own judgment, I think it's high. The only reason that would justify this is if the interest payment is because, of course, the company is highly geared. We've seen that we've seen that earlier, right? The company is highly geared, so I want to believe the interest repayment on the loan is huge and is a substantial part of this amount. If that is not the case, and of course the loan will be paid off, and then of course the company will get out of that. So, but if it's not the loan, then if I were the CFO, I would be looking for how to ensure that my other expenses do not materially exceed the cost of sales, except of course if there are unavoidable business expense that has to be incurred. So the earnings is 61 billion. This is not bad. This is very huge. 61.2 billion earnings available to distributed to, of course, shareholders. Of course, there will be payments to government in the form of tax out of this amount. But of course, so that's if you look at the so of course, so that is that. Then going back to debt, If you look at debt to equity ratio here is 68.9%. So this is the ratio of the loan that the company has taken, the debt of the company to its share price, right? So loan over share price. So looking at this, the earnings per share is 61.15, right? So that is the earnings per share is the proportion of the earnings, these earnings that we have per over the share value of the company. So this earnings divided by the share value of the company gives us 61.15%. The gross margin is 77.43%. That is the gross profit, right, over revenue. So that gives us 77%. The net profit margin is 39.69%, which is this margin here. This is the 61 over 154 54 billion. So that gives us the 39.68 billion as net profit margin. The debt to equity ratio is 68.9. So that's the proportion of the debt to equity that the company currently maintains. Right. So the dividend yield, current dividend yield for Presco is 4.9%, and its dividend payout is 40%. So back to this place, it means that the company is going to pay 40% of this amount as dividend to shareholders. 40% of 61 billion is going to go to the shareholders as dividend. So this is very huge. It's very huge. The company committed to pay 40%. It's very huge. So clearly, the company is paid 30% to government in form of taxes, then 40% to shareholders. So it means the company is going to retain the remaining 30% of the business, right? So that's a good one. That's a good one. Looking at valuation as well, Presco is valued below its fair value. So Presco is valued below its fair value. So this means that the share value of the company is actually um, below its fair value. That's based on the judgment of the analyst. And just to mention to you, this tool actually has gets contribution from Nigerian, even though it's a foreign tool, it also gets contribution from some experts in Nigeria. So that's why I actually like to rely on this tool. And of course, I have very good understanding of accounting. I also have very good understanding of the of investments, of the shares, right? So that's why I rely on this. So I'm not recommending it. If you think the tool is useful to you, you can go ahead to use it. I'm not recommending that you use it too, right? So of course, it's not financial advice. I'm just using this to teach you how to pick your stocks, right? So some of our stockbrokers in Nigeria also have similar tools, right? Some have reports that they issue periodically. They send newsletters and articles, and all those reports and articles would also can also help you make your decision, right? So, but ultimately, you need to also have an understanding of these things we are discussing. And this too will actually help you understand most of these things, help you understand the basics. And then, of course, you can begin to download financial statements of companies you are interested in, and then compare the results you find here, right? And then do your own analysis. So this just provides you with the first level information you need. Very important, actually. First level information you need. You need that detailed research that's been done by a professional, right? So you actually need it. It's very helpful. You find it very helpful. So and of course, and information is not always too much, right? So because it's money we are talking about, your investments, you want to be sure you are putting your money in something that is profitable, something that is worthwhile, and something that will give you the results that you desire, right? So back to our analysis. So Presco has been growing its earnings at an average annual rate of 48.5%, while the food industry saw an earnings growing of 34.4%. And then revenue has also been growing at 41% per year. Presco's return on equity is 72.3%. Wow, this is actually very high, right? So very high. Food industry growth rate 21%, Presco's growth rate 48.21%. That's about 27% difference, right? Its revenue growth rate is 41, return on equity is 72.3, then the net margin, which we saw earlier, is 39.7. So this is actually These are strong indicators. These are very strong indicators. So that's based on past performance, right? So let's see what we have under the financial health. Financial health, what do we have there? Okay, financial health criteria. Presco has still share equity of 84.6 billion and the debt is 58.3 billion. Wow, this is good. So this company is under leveraged, so the equity is higher than the debt. So debt to equity ratio is 60.9%. We saw that earlier. Total liabilities is 207 and total asset is 207, total liability is 122.7 billion, and its EBIT is 92.2 billion. So this is actually a well balanced company. So you can see here, right? It's short term assets, right? Covers its short term liability, right? Almost double, covers it almost twice. Then its long-term asset also covers its long-term liability. Of course, not almost, not twice, but very close to twice. So in the short term, so again, that's what you have here, short-term liabilities, principal short-term asset exceeds its liabilities, and then its long-term asset exceeds its liability. And the debt to equity history analysis, debt to equity history analysis. So you can see this is equity. So equity has always been higher than debt, right? So, but at this point, debt actually exceeded equity. So, but we can see that it has picked up again, and now equity is higher, right? So, what could have so what could have happened here, right? So we can research into that privately and find out what happened here, right? It's possible the company took loans, right? And then the loans overshot its equity, right? So these are possible reasons the why debt exceeded equity. Another reason is you can see that the share value dropped. So this may also be as a result of the share price volatility. Share price volatility. So we saw, we saw. Remember that we saw a very steep and a very steep uh, fall and then stagger in the share price of the company around this time. So that could also be another reason why there's a dip here, right? So Presco's net debt to equity ratio is 55.4%, and this is actually very high. It's high actually, and then but the debt is reducing. The debt is reducing. You can see the debt to equity ratio has reduced from 94% to 68.9% over the past 5 years, right? So it's reducing gradually, and then the debt coverage is well covered. The debt is well covered by operating cash flow of 114.2%. So this is not a case of the company cannot pay, right? So the company has enough cash to actually cover its debt. So meaning that if the bank calls for all the money today, right, the company can pay. So of course the bank cannot call for all the money today because the loan would have been spread over a number of years, right? So that would not happen. And then interest payments on the debts are well covered by a bit. So and it's covered 8.5 times. Wow, you can imagine. So the company is as company can easily manage that debt and it's not so this is a good debt. That's just a summary. It's a good debt. Company can easily manage, the company can manage it and it won't kill the company. Right. So let's see. So we've seen financial health, we've seen past performance. Let's see the future growth. So Prescos is forecast to grow earnings and revenue by 40.2%. That is, earnings will grow by 40.2%. Revenue will grow by 31.8% per annum. Wow. Earnings per share is also expected to grow by 40.3% per annum, while the returns on equity is forecast to be 38% in 3 years, right? So you can see that all the forecasts are looking good, right? So let's see. So this is the forecast that has been done, right? So if you look at revenue is going to grow, continue to grow up until 2027, right? and then the earnings will also grow that way, that same way, up to 2027. You can see it's all growing evenly, it's growing evenly, going together. So growing steadily. So if you look at if you look at the annual earnings growth forecast, right? So the earnings for the company is 40%, industry average is 12.5%. That is after the analysts did similar forecasts, right? For Presco and other companies in the industry, right? And based on that forecast, on the average, all the other food companies, their growth forecast is to 12.5%, but Presco's own is 40.2%. What does that tell you? What does that tell you, right? So, and then looking at markets, that's the entire Nigerian stock market. The earnings forecast is 29.8%. Presco is 40.2%. Again, what does that tell us, right? If you look at the annual revenue growth forecast, for the company is 31.8%, for industry is 5.5%. You can see, and then for market, the forecast is 13.0%. So by all standard, this company is doing well, right? So these are all those things written in words. Presco's forecast earnings growth of 40.2% per year is above the savings rate. Oh yes, 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 yes. So you know that the FGN savings bonds rates, right? So this is actually reflecting the FGN's savings bond rate, 13.8%. So the interest rate hovers around this amount, right? So even though it's slightly higher nowadays. So, but then what it's saying is that the earnings growth is forecasted to be higher than that, right? And then when you compare to market, it's also growing faster, and then uh, and then Presco's earnings are expected to grow significantly over the next 3 years, right? So earnings per share, earnings per share growth forecast. So you can see earnings per share has grown from 2023 to 2024, and now they are forecasting further growth in the earnings per share. Yeah, returns on equity is also high. It is 38% for the company over the next 3 years, right? And then for industry, it's 36%. Right. So now let's check dividends. That is the dividend payout. If you are buying shares for dividends, if you are buying shares for dividends, then you should be more interested in this, in number five, right? So number five, so Presco is a dividend paying company, of course, for sure. They've not missed paying dividends over the last 5 years. So they've been paying dividends consistently for the past 5 years. And the current yield is 4.89%, right? So 4.89%, that's dividend yield for Presco. Okay, so let's move to this very important chart, right? Very important actually. So this chart shows us the growth in payments of the growth in dividend payments and stability of dividend payments. So if you change the dividend yield, right, its rise went up here and then dipped and then went up higher this time and then came down and then still stepped down, and of course its projection is that it will still pick up again. That's the projection actually. So, but if you look at what we have for earnings per share, you will see that earnings per share also increased at this point, and then it went up. So they are moving in the opposite ways actually, right? So the earnings per share would move in the opposite ways to dividend yield, right? So that's what you can see here. And dividend payments, you can see dividend payments here. Another dividend payment made and started rising, is rising, went down here. Okay, so in this year, the dividend was paid twice, right? Interim and final. So if you add these two together, you will see that's higher than what they had in 2021. Same thing 2023, interim and final. So you need to add both up. You can see it's very high, right? And then 2024, same thing. And the projection, and in 2025, you can see what projection looks like, right? for 2025. Okay, so Presco's dividend per share has been stable over the past 10 years. So you can see dividend per share has been stable over the past 10 years, and then dividend payment has increased over the past 10 years. So this is a good dividend paying company, right? So if you look at dividend yield, right, versus markets, even though it's very volatile, let's compare it to what the market is doing. So dividend yield for the company is 4.9%, right? Currently, the market bottom 25 is 1.3% on the average. That is bottom 25 means the companies that make up 20, so the companies were divided into, let's assume we have 100 companies now on the stock exchange, right? And then they ranked those 100 companies, right, from the highest to the lowest. So they are saying bottom 25, which means that the last 25 companies in that ranking, that's number 76 to 100, that their dividend yield is 1.3% on the average. That's for all those 25 companies. And then it's saying the market top 25, yes, the number 1 to 25, right? In the market, their dividend yield is 5%, right? So that tells you clearly that Presco is one of these companies in the top 25. Presco is one of them. So that's why its yield is also this high, 4.9%. Industry average is 1.8%. Forecast of up to 3 years for industry is 1.2%, right? So and then Presco's dividend 4.89 is higher than the bottom 25 of dividend payers in the markets. Yes, it's higher than the bottom 25. Presco's dividend 4.89 is lower compared to the top 25 of dividend payers. Okay, so this is actually talking about the absolute dividend payments that's been paid by Presco. So I will let me try to explain why it's low when you compare top 25. So top 25 companies, right? It is quite a number of them are companies in the oil and gas industry, right? And then a few banks. So what you find out is that these companies actually have higher dividend payouts, right? Because of course the industry they play in, and the value, their share price, the value of the share price, and the type of profits that is being declared, the volume of the profits that is declared as dividend by those companies, right? In the top 25. So that's why Presco is 4.89. So, but then it's not too bad because it's 4.9. So it's just 0.1%, 0.1% difference, right? So that margin is not um, a lot to worry about, right? So earnings payout to shareholder. So the company is going to pay 40% of its earnings to shareholders. I think we discussed that already. So if the company is paying 40% of its earnings to shareholders, it means it's prioritizing shareholders a lot, right? So this is almost half of its earnings. So this company looks like a good buy to me, right? It's a good buy to me. Feel free to save this video and come back to rewatch it until you have gotten a hold of how to go about it. I will drop the link to this tool in the description to the video. Also, I will drop the link to my other videos where I discussed how you can start investing in Nigerian stocks. Please watch it. If you have not yet clicked the subscribe button and like this video, please do so now. Also, share the video with your friends so they can also benefit from this valuable information. I would love to hear your experience, thoughts, and questions in the comments. Also, let me know what else you want me to talk about on this channel. And don't forget to hit the subscribe button. Thank you for watching. Now, watch any of these two videos on your screen. Thank you.